Hey everybody, we are going to talk about one of my favorite companies to follow these days. That is Dream Finders Homes. Ticker symbol is DFH. They just reported an excellent fourth quarter, and 2025 is looking like it's going to be better than expected. Before we dive into the numbers, please take a minute and check out the link you see on your screen right now, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Be sure to stay tuned after this video for a special message from the Motley Fool. That link again is fool.com/Frankel, and it is in the description as well. So let's go ahead and dive in. I'm going to share my screen real quick. So this is from Dreamfinder's latest investor presentation. You can see that okay. So this is just comparing the numbers from this year to last year. You can see revenue went up from about $3.75 billion to $4.45 billion. Pretty significant revenue growth. Home closings, Dreamfinders had guided for 8,250 homes in 2024. They beat that by over 300. You can see that right here. Average selling price went up just a little bit, which is in line with the overall market. They have a big controlled lot pipeline. A lot of that came from an acquisition, but a lot of that is organic growth. Return on equity dropped a little bit, and we'll talk about that in a little while. The backlog of homes that they are entering 2025 with is significantly lower than what it was entering 2024. And the reason for both of those declines right there is incentives. Home builders are having to give customers more incentives to buy homes. Mortgage rates unexpectedly went back up toward the end of 2024, and the market is kind of just still very slow. So it really caused home builders, especially dream finders, to have to give people more incentives to buy homes. So we saw that quite a bit in the fourth quarter. Nothing at an alarming level. Backlog of 2,600 homes entering 2025 is still pretty impressive. That's more than a quarter of their total guidance for the year, but it is worth keeping an eye on those numbers. So looking into 2025, Dreamfinders, they expect about 9,250 home closings for the full year of 2025. That should say 2025. So you can see their backlog of homes. That includes the impact of a recent acquisition that closed after the end of 2024 that brought them into the Atlanta market, which is, I believe, is the largest home or housing market they're in so far. So that is definitely could be a nice catalyst as the year goes on. But so they're expecting to do significantly more home closings in 2025. Now that assumes current conditions. That does not take into account any big economic changes. If interest rates go down, go up significantly, if the economy goes into recession, if the economy is doing really well, this is just kind of like with current conditions. So any major changes could change that number. And Dreamfinders does have a history of updating their guidance every quarter as we go on throughout the year. So this is just kind of you can see the home closings year by year since 2015. Right here is when they went public in 2021. So you can see, even since they've been a public company, their home closings have roughly doubled. And 2021 was an extremely strong real estate market. So impressive growth, a 33% annualized rate over the past 5 years. So impressive runway for growth, but there's a lot more room ahead. Remember, Dreamfinders is only in a handful of markets right now. We're going to look at some of those in just a second. You can see this is their revenue growth, how much they're making from selling houses. That also kind of increases in line with the number of homes they sold on the previous slide. You can see their margins are not quite as strong as ever, but they're still very, very strong. A 27% adjusted gross margin for a home builder is very, very good. The market economics are still really good for home builders right now. You can see that's kind of steadily improved and leveled off in 2024. You can see the land light model. Dreamfinders goes on to talk about that and how it's helped their business. But let me go to, there we go. So one of the reasons that I like Dreamfinders so much going forward is that I think they are going to be a big beneficiary of the housing shortage in the United States. And for this reason, they specialize, the two on the left are kind of their bread and butter. They specialize in entry-level homes and what they call first move-up homes. And right now, depending on who you ask, we have a big housing shortage in the U.S. It's between 3 and 6 million homes, and depending on your source, roughly a million of those are going to be single-family houses that are going to need to be built to kind of make supply and demand reach an equilibrium. And entry-level homes are really what's going to do that. So I think that gives Dreamfinders an edge going forward, especially because they operate in some of the most affordable, relatively, markets in the United States still. And their markets have really nice tailwinds right here. You can see when I said they're only in a handful of markets, a little more than a handful, but they're primarily in the Southeast. They have a presence in Texas and a couple of the Midwest markets right here. That's Colorado right there. So Florida is where they're based. But if you look at just Dreamfinders markets right here, the average population growth for the past 5 years is more than 4 times the U.S. average. The average home price appreciation is more than the U.S. average. Job growth is above average. And these are relatively low tax states, so they're attractive for people to move into. That should help keep the market going, or keep the business growing strong. The Atlanta market right here is the one to watch. That's the one they just kind of moved into. That has a lot of potential. And really impressive stat. These are markets where people are moving into. Over 3/4 of all U.S. migration is into the states where Dreamfinders operates, and there's only a handful of states. You can see there's the 6 right here plus 3. There's 9 states where Dreamfinders operates, and those 9 states account for more than 3/4 of U.S. net migration. So that should help keep this business growing for years to come. Company's doing a really good job. They do have a little more debt than the average home builder, which is definitely a concern. The decline in backlog is definitely a concern. This business could really take off if interest rates start to fall and the market starts to normalize. Right now, a lot of people who would love to buy a new house are kind of stuck in their old home because they're sitting on a 3% mortgage and don't want to leave. So as rates come down, you're going to see a lot more people interested in buying new homes. And I think this was a pretty fantastic quarter for Dreamfinders and for most home builders, actually. Let me know what you think. I'll do my best to respond to any comments or questions individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.